Hello, this is Tulane University's Burkenroad report for Carbo Ceramics. My name is Brian Lozes, and together with my teammates Jessica Daliger, Yufeng Gao, Yukun Song, and Lena Zhang, we'd like to thank you for watching our analyst report. Carbo Ceramics is a publicly traded company on the New York Stock Exchange using the ticker symbol CRR. The company manufactures ceramic proppants for use in hydraulic fracturing. In addition to proppant manufacturing, Carbo offers technical services in geotechnology, reservoir modeling, spill prevention, and management. The price was $74.08 per share as the market closed on November 23, 2012. Our 12-month prediction is $76 per share. So what are proppants? Proppants are used in hydraulic fracturing. Hydraulic fracturing is the process of pumping water, a small percentage of chemical additives, and proppants at high pressure through horizontal wells drilled thousands of feet below the Earth's surface. The process is used to break through the shale rock formations in the Earth's crust. Proppants maintain the structure of these cracks and create a path to allow oil or natural gas to flow more freely out of the earth than conventional methods allow. Carbo has an expanded product line to serve a variety of proppant needs. The range of products offer alternatives to competitors' minimally conductive sand proppants, while providing enhanced conductivity with proppants that can withstand the high temperatures and volatility of deep wells. Carbo aims to optimize the productivity of oil and gas wells across the world by providing high-quality proppants and services. 7 manufacturing plants, both domestic and international, support production. According to Carbo's annual report in 2011, industry demand for Carbo's quality proppants reached an all-time high with 21% sales growth in North America. To meet the market demand, Carbo opened up a 4th production line in Toomsboro, Georgia, with an annual capacity of 250 million pounds in the late 3rd quarter of 2011. In addition, Carbo aims to expand the suite of its proppant products. In early 2012, Carbo opened an additional line with production capacity of 300 million pounds in New Iberia, Louisiana. The company continues to distinguish itself from competitors by offering fracture and simulation experts and software, geotechnical monitoring systems and services, and spill prevention and containment systems. Carbo's long-term mission is to continue to be a forerunner in client services and research and development, and will continue to provide expertise to companies involved in some of the most significant resource plays in the United States, including the Bakken, Eagle Ford, and Utica basins. Therefore, Carbo would be able to gain new clients and add value for existing customers. Carbo's proppants are mostly used by oil well service and equipment companies. There is a direct correlation between the price of oil and natural gas and the number of wells in production. Specific to the fracking industry, the demand for proppants has a strong correlation to the horizontal rig count. Thus, adverse changes in pricing or production would cause a decrease in demand for proppants. Advancements in hydraulic fracturing have received both political and public concerns over the last decade. At the request of Congress, the EPA and other organizations have been conducting studies regarding the effects of hydraulic fracturing since November 2011. The final draft of this report is expected to come out in 2014. Negative findings may adversely affect both the company and the industry as a whole. To forecast Carbo's earnings, we analyzed both the company's strategy and external drivers, such as the company's product development and oil and gas prices. Key strategies of Carbo include adding infrastructure, researching new manufacturing techniques, and continuing organic growth and dividend payout. Carbo is adding production facilities to prepare for expected proppant demand growth. However, the time frame and growth rate for increased industry demand of proppant, driven by commodity production levels, are unknown. The company will be poised for increased demand, but added production sites will sit idle until this uptick occurs. Carbo's advanced technology and product development combined with efficient customer service lead to long-term business success. In order to protect market share, Carbo continues to improve products and expand its product line. Carbo's service line helps distinguish the company from competitors. The company's ability to develop a niche in the market is at the core of Carbo's strategy to gain and retain clients in an increasingly competitive environment. Despite the stock price volatility over the past 12 months, Carbo has increased production capacity, maintained a debt-free balance sheet, and increased dividend payout. Investors holding Carbo's stock will benefit from the company's propensity to increase dividends. Moreover, Carbo has an ROE of 19.5%, which is higher than the industry average of 9.7%. This favorable ROE contributes to Carbo's ability to offer an attractive dividend yield at 1.7%, comparable to the industry average of 1.37%. Increased industry activity in liquids-rich plays will provide an opportunity for Carbo to establish a strong foothold in these areas, which include the Bakken and Eagle Ford shale plays. Operators will continue drilling in the wells where the greatest return on production can be realized. Changing commodity prices create a volatile market where operators will shift resources to produce in the most profitable plays. We expect production and pricing volatility to continue in the industry. Carbo faces risk in the oil and gas industry with the oversupply of natural gas and strengthening competition. This pricing and production risk affects the market outlook on industry stocks. Carbo's revenues are highly correlated with commodity prices. Therefore, investors should be aware that volatility of oil and gas price directly impacts the company's revenues and stock prices. We used three ratios: price to earnings, enterprise value to EBITDA, and enterprise value to sales, evenly weighted to identify our 12-month target price of $76. We believe that these ratios represent appropriate drivers of Carbo's market valuation. With the current price around $74 and our 12-month target price of $76, we have given Carbo a market perform rating due to the volatility of the oil and gas industry. This wraps up our presentation of Carbo Ceramics. Thank you for joining us today. The Burkenroad reports are produced solely as a part of an educational program at Tulane University's A.B. Freeman School of Business. The reports are not investment advice, and you should not rely on them in making any investment decisions. You should consult an investment professional and/or conduct your own primary research regarding any potential investments.